You may have heard already, but BigCommerce has filed for an IPO. Now, this is great news for the platform, for partners like us, but most importantly, this is great news for e-commerce merchants and could be a huge step toward reshaping the e-commerce landscape. But it's not all sunshine and rainbows, and an IPO comes with changes and risk. Pull yourself up a chair and let's talk about it. My name is TJ Gamble, and I'm the CEO and founder of Jamerson, an e-commerce agency dedicated to helping you get more from your e-commerce store. I was a bit heads down and preoccupied when Magento was acquired by eBay way back in 2011, so I barely even noticed. However, I've been through this already with Magento's second acquisition by Adobe. You could just feel it in the air. Something's happening. The platform's just being too aggressive to be profitable. They're obviously building towards something. In hindsight, the Adobe acquisition makes sense, although at the time, I really thought Magento was building toward an IPO themselves. When I see how aggressive BigCommerce is toward adding new features, improving the platform, recruiting and promoting partners, I think to myself, that's expensive and unsustainable. Something's definitely up. Now, I don't know their finances, so who knows? Maybe I'm wrong. Nope, wasn't wrong. Based on the IPO filings, the platform lost over $40 million last year. No wonder my efforts to try to get them to buy me a bottle of Pappy's were unsuccessful. Maybe someday. There are 4 angles to this IPO that I really want to touch on, at least a little bit. The impact on the platform itself, the possibilities for partners like Jamerson, the impact on merchants, and we'll finish it off with the bigger picture and how it could change the e-commerce platform landscape as we know it. The main impact on the platform itself, it's pretty obvious. They've secured that bag, baby. I mean, people who know more about this crap than I do have claimed that BigCommerce could be valued at up to $1 billion. At that valuation, they're expecting to raise over $100 million with this IPO, and I'm sure at least $37 of that will be from me. Of course, all of that depends on how much investors are actually willing to pay for the stock, so stay tuned for actual numbers and not pure speculation. Money means aggression, in both a good and a bad way. On the good side, it means more resources and people improving the platform. Features should be flying out at a faster pace. Marketing should be ramped up to draw more folks to the platform, not to mention the exposure and legitimacy that comes from the IPO and being publicly traded. And that can help cut through some of the stigma from the less informed that BigCommerce is somehow less than Shopify because it's not publicly traded. In addition to all the press coverage and free publicity that comes from regular financial reports, stock prices, and the announcements from publicly traded companies. For those using the platform to make their living, whether as a partner or a merchant, that's all great news. More capabilities, more exposure, more opportunities, more. There are a couple of obvious problems with being publicly traded. First, the leadership that got you here, it's not always the leadership you need moving forward. That can suck, because it's their vision that helped make this thing you're doing so special, and they were a key ingredient in reaching this destination. If they're the founders of the company, then perhaps their lack of experience will be exploited at their first misstep to push them out. If they aren't the founder, then oftentimes this was actually their mission, to get the company here, not necessarily to lead it forever. Now, I don't know anything about the leadership group at BigCommerce's intentions moving forward, and I'm not making any speculation about them. I'm just hopeful that the vision that has made them so successful to this point continues, because I think they're headed in the right direction overall, and we'll get into why I believe that when we talk about how this could reshape the e-commerce landscape later in this video. Another problem is that being publicly traded comes with a lot of pressure. Shareholders demand growth, so their investments are worth more tomorrow than they are today. You have to be constantly aggressive in growing and building towards something. If you don't, well, that pressure mounts and you soon don't have a job. That pressure, if not properly handled, can lead to missteps and decisions that are counter to the greater health of the ecosystem. As of now, that's just a potential problem, and we'll just have to wait and see how it all plays out. From a partner perspective, this is fantastic news. The quickest way to grow your business is to latch onto a technology or platform on the verge of exponential growth. There's nothing better than latching onto a rocket ship just before launch and holding on for dear life. I just wish that I had been in a position to be more directly involved with Magento, the company, in the early days of their growth, but unfortunately, I was head down coding on the platform instead. But If that had transpired, probably wouldn't be here talking to you today. I'd have sold out and probably be sitting in my beach house right now, riding out this pandemic supporting a pina colada and fish taco delivery service. But back to reality. I saw the potential for BigCommerce a couple of years ago, and that's why we signed up to be partners and support the platform. There is always opportunity and change. I just hope I can find the wisdom and resources to take full advantage of the opportunities that arise out of this for Jamerson. But we'll see. There's also always risk in change. A change in direction, leadership, sales tactics, the merchants the platform attracts, etc., all come with risk to my business. For example, Magento's acquisition by Adobe and the decisions both before and after that acquisition have pushed it further up market. That's great for larger agencies that are poised to ride that wave to bigger deals. However, it's a huge risk for smaller agencies like us that aren't focused on that big enterprise market and don't have the resources to chase it. This has led to fewer opportunities in the markets we serve. Over the last several years, really since the introduction of Magento 2, it has been leading agencies to leave the Magento space or explore acquisition and mergers to grow and go after that new sweet spot that the platform has in the market. Luckily for me, I believe this change with BigCommerce is actually going to move them more in our direction instead of away from it. The SMB market on Magento that we've thrived in is the enterprise market for BigCommerce. For the most part. This is the market that BigCommerce is pushing towards, and I think we're poised to serve it well, so I anticipate this increase in aggression to actually play in our favor. From a merchant perspective, this is all just good news. SaaS is growing, but BigCommerce is proving that it doesn't have to be limiting. They're on a mission to show that you can have the simplicity and ease and, for the most part, the flexibility that you need. They're adding enterprise functionality left and right, and even with it being my job, it's hard to keep up with all of the initiatives. They're currently in the works to shore up a lot of the platform's weak spots. Multi-channel, multi-site capabilities, multi-source inventory, and B2B are all big focuses for them at the moment. For merchants, that just means more features and capabilities for less money than getting it elsewhere, and that's great news. Merchants have more tools and technologies to invest in than ever to meet consumer demands, and advertising and acquisition costs continue to rise. Finding a platform that meets your needs while simplifying your business and saving you money is going to be imperative. Let's talk about the big picture for a minute and why I'm so bullish on BigCommerce. SaaS platforms have an inherent advantage in regards to operational simplicity and typically cost savings. Maybe or maybe not in terms of subscription fees, but at least in total cost of ownership versus open source platforms. That means SaaS isn't the future of e-commerce. It's the now of e-commerce. Even open source platforms like Magento are trying to be PaaS, or platform as a service, to move a bit more in that direction, and I wouldn't be surprised at all if Adobe one day introduces a SaaS version of Magento. I don't even know how that would work, so I'm not even going to speculate. And don't bring up Magento Go, just don't do it. But from a business perspective, it makes sense. Shopify's focus on simplicity, agility, speed to market really drew a clear line in the sand early on. Small businesses that have simple needs or small budgets are ideal SaaS customers, and others are open source customers. As Shopify's platform has grown and other competitors like BigCommerce have stepped in and added more flexibility and capabilities to their SaaS offerings, that line has been steadily moving up market. And Magento was smart. They understood the shifting market. It wasn't that they wanted to abandon small merchants. Of course not. They wanted to be everything to everyone, just like they were 10 years ago. That's just not possible today with all the options available. Magento had to move up market not just to thrive, but to survive. Instead of being focused on SMB and opportunistic on enterprise, Magento needs to be enterprise and opportunistic on the SMB. They need to focus their efforts on the customers they most obviously serve well and where they have the most advantages. That shift in focus really happened well before Adobe's acquisition, back with the creation of Magento 2. So any blaming of Adobe for that shift is just misinformed. Adobe just acquired what was already a platform moving into the market they want to focus in. With that shift, it left a huge void in the middle of the market. Businesses that were perfect Magento 1 customers a decade ago are now left floundering to figure out what's their best option, and for many of them, Magento 2 wasn't the answer. A lot of platforms are rushing to fill this void, from existing powers like Shopify to the slew of new e-commerce platform startups. I think BigCommerce, though, is uniquely positioned to be a leader in this space. Their focus on flexibility and enterprise-grade functionality are going to give it some significant advantages as SaaS platforms continue to move up market. This influx of capital and, just as important, the exposure that comes with it will help them take those next steps toward owning this market. But what do I know? Let me know your thoughts in the comments. Don't let my opinion be the only one that's heard. If you enjoyed this juicy e-commerce goodness, here's another video that you'll probably like. Go ahead and click on that one because we're all done over here. You might also consider subscribing if you aren't already, and I'll see you next time.